Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So we're going to be going through another mortgage rate update, how I am totally screwed when it comes to business. We might be going out of business. I'm not going to lie to you. I think that we probably are going to go out of business because that's what happened back in 2008. And real estate has gotten so shitty that it just is what it is. I'm probably, we already had to lay off a few people and I'm like one step away from laying myself off. Business is not that great. And especially if you go ahead and look at the mortgage rate update that I do, the amount of loans that we're doing right now, we are at 267. We have a total of 7 loans that we have done for the month of August, which is terrible, horrible, especially from us that we were doing much more across, you know. Let me pop my button over here. I'm a little bit too Middle Eastern right now. It's good. It got aggressive, but damn. Even though mortgage rates did kick up really high last month, and then all of a sudden they started doing that, they're inching up and up and up. Everybody's kind of taking a back burner on everything, but let's go on with the mortgage rate update. Not only am I going bust, what majority of other companies are doing, majority of other company is going bust too. Now I'm going to go ahead and show you. So majority of us mortgage professionals, real estate professionals, people in the industry of mortgaging, you know, we dabble into different types of publications. National Mortgage News is one of the ones, of course. Obviously, I'm a mortgage broker. I'm going to go ahead and keep myself up to date. They actually did Andrew Martinez, okay? I want to go ahead and give credit where credit's due. He populated all the mortgage layoffs in 2022, and I'm going to go ahead and pop a list of all of the mortgage companies that is just laying people off left and right, and it is what it is. And then there was actually one thing that was really surprising, where there was an affiliation between one real estate company and mortgaging company that I did not expect. I honestly don't know how I feel about it. I mean, regardless, it doesn't matter doesn't mean shit what I feel about anybody's company or anything like that. But let's go ahead and get on with the mortgage rate update so we see where we're at. We're going to be pricing out 10 different mortgage products, and by all means, just so you know, if you're interested in any one of these mortgage products, link in the description below for up to 50% commission rebate or 0% listing on selling your current home. Link in the description below. But we're going to be pricing out 10 different mortgaging products, and I heard it from a few people, oh, you're disclosing rates but not the APR, because typically what we're supposed to do is when we disclose rate, we go ahead and disclose rate, we have to disclose the annual percentage rate, because those are two different things. So this is actually an educational part of it. APR and your rate are two totally different numbers. They're not the same number. The rate is going to be the face value. Your APR, your annual percentage rate, is actually what you're going to be paying for. But not only do I have a disclaimer at the end of it, which covers my ass, CYA, but this is also just a mortgage rate update that's on average to us. But it is what it is. But we're going to be pricing out 10 different mortgage items. Let's get on with it. 30-year fix will be sitting at 4.98%. 15-year fix will be sitting at 3.96%. 30-year high balance will be sitting at 5.43%. DSCR loan, which is a debt service covered ratio loan. This is a loan product where it takes the expenses of an income producing property, and then it calculates that as an income rather than your W-2s or your pay stubs or anything like that. And then it gets a ratio based off of the total debt versus the servicing. So how much money you have coming in on rental versus how much is going out on the debt. That's sitting at 8.89%. Bank statement loan, this is another one of those non-agency, non-qualified mortgage products. This is a mortgage product that just takes your bank statements. We see how many credits you have versus how many debits you have. We run a ratio on it, and then we get your debt to income off of that, and your credit score, of course. That'll be sitting at 7.93. FHA 30-year fix will be sitting at 4.36. 7.6 adjustable rate mortgage will be sitting at 5.38%. USDA 30-year fix will be sitting at 4.42%. VA 30-year fix will be sitting at 4.39%. And hard money fix and flip, which will be sitting at 9.6%. Now that's a mortgage product that are for a short term, you know, if you want to buy a house, you want to fix it up, and then you want to flip it for a profit. Typically 95%, 96% of the time, that's what it's for. There are some people who do it on a longer term of it, but typically it shouldn't take you more than, it's like a 12 to 24 month product. Now, like I said in the intro, if you are interested, link in the description below. But there's this other thing. Okay, first of all, we're all going broke here. Now I'm going to go ahead and pop up this list of the list of mortgage layoffs in 2022 that was done by Andrew Martinez. Now we have officially dropped. Now as far as refinance business, we lost refinance business at about 85%. The rest of the companies that are out there, like let's say for instance JP Morgan Chase and the Sprout Mortgage that was on the East Coast, they completely closed their doors altogether. This is something that's been going on along the lines of every single real estate company out there, especially in the lending side of it, because our business was so much and we had to hire. Now this is just a vicious cycle that goes through. And it kind of gives me some remnants of 2008, to be honest with you, because everybody went completely out. But there's a list of every single mortgage company that has done layoffs, have shut down shop, have just, went solvent. Sucks. We're all in the same boat. Business is terrible. Now even though I have about 7 mortgage applications or mortgages that we've done for the month of August, that's still not even close to being enough. That is typically enough for just one person, not for a whole entire team. Well, there's this other thing that's called the AB 2011. AB 2011 is the Affordable Housing and High Roads Job Act of 2022. So to give you a precedence of exactly what this is something where you could go ahead and take commercial zone property without having to go through all these hoops and all this red tape and everything like that. And you could just go ahead and turn it into residential property because you're like, hey, nobody's really using it. This is like a really crappy thing. Why not just go ahead and use that for affordable housing? Sounds like a really, really great idea until you get money involved. Money involved, it makes everything much more difficult. So you have all these senators that are just senators, assemblymen, lobbyists. Then you have union workers that get involved with all of this. So essentially, this is going to be awesome for housing crisis. Because there is a housing crisis. The rental prices have gone up so much. Affordable housing has decreased by a substantial amount. So this is what they say is at the heart. At the heart of this argument, they're saying that at least 100,000 workers will go ahead and build these Californians home. The groups, this is why the groups disagree. The groups disagree on how to go ahead and grow the trades pool. Now the tradesmen, the unions, everything like that, they're saying, listen, if you guys want us to go in and work, there has to be some sort of apprenticeship. There has to be some sort of qualification that each one of these workers have to go through in order for us to go ahead and jump on board with this bill. Because if you don't, then what happens is then these other companies could go ahead and take people that don't have apprenticeships, don't have any trades value. They don't know the trade as well as they do, whether you're an electrician or you're a plumber or whatever you are. You don't have licensing. You don't have any of those things. So what that means is then you get unqualified workers. Unqualified workers, then sometimes what happens is you get undocumented workers. Undocumented workers, so that means that majority of the money goes ahead and prize pool outside of the workers, and it goes ahead and gets put more into the pockets of the GCs of whoever is doing it. That's one of the arguments. The other one of the arguments is going to be the zoning part of it. Now, we'll understand why there is different parts of zoning. Now, whenever you have commercial zoning, you have residential zoning, you have R2, R3. Each one of these zonings is specifically for that reason. Now, majority of the time, you don't have a lot of rental properties in a place where you have housing communities. You don't have commercial where you have housing communities because number one, what it does, and if you have a commercial property that shares the same thing as a housing commercial and housing share the same zoning, there is no definitive separation between either one of them, well then that decreases the value of homes. So like let's say for instance an industrial building just decides that, okay, I want to go ahead and build right on the other side of my house. Well, that is going to go ahead and decrease the property value that I have. Number two is, and I don't mean to say this in a really, really negative context, and I apologize, but I'm just giving you the facts of the matter. The fact of the matter is that whenever you build something so close to industrial, what happens is that you end up pre-populating crime. It just is what it is. It's a nationally average thing. This is something that statistics have been done, that there's censuses out there that whenever, this is why separation has existed, so you don't get into this world of being in an industrial area and then being in a residential area and then combining the two, because statistically one has always increased the other one. This is going to be an ongoing fight. They have, I guess, until next Thursday to figure this out. I have no idea how they're going to go ahead and go with this. But if you want to stay up to date with any of it, please go ahead and like, subscribe, comment for up to 50% commission rebate, 0% listing on selling your current home or any mortgage assistance. Link in the description below. Until next video, guys, I really appreciate you watching. Peace.